I think you guys told me this, but that I wouldn't want to look at the dollar amount, but the percentages, so that I keep my eye away from being demoralized by the dollars.
Or even the chart. You're just looking at when you're looking at your stops. Again, if your plan is to buy a 250 break and risk VWAP and it's 225 and your goal is 3+, you just look and if that stock touches 225, you're out. You're not sitting there looking at that number and then the number goes up a little bit and you're like, oh, and then it goes down. Well, you're looking at that chart, you're looking at your plan, and if it hits your stop, you take your stop and
Welcome to the SteadyTrade podcast. We have Kim and Tim. We are now entered into the new year, and the other thing that's boosted and came through into the new year with real bang. I mean, as we speak, Bitcoin is at 28,367. One Bitcoin is worth that. So we've really entered the new year with Bitcoin running along with the biotechs. And I guess we just wanted to discuss it. There's been some very hot plays. We've had BTBT, Riot, Mara, all back on the scenes. NXTD. Is that NXTD as well?
Yeah, NXTD is loosely crypto. I mean, but it's, I took all year to get my It's 2020 baby shirt. And here it is 2021. So at least I got my Joe Rogan, I be getting lucrative shirt. But, I guess the biggest theme we're going to talk about today is kind of this isn't necessarily a prediction episode. We did one of those already, but just kind of more of a preview of 2021. And it's such a applicable ending. Here we are recording basically on New Year's Eve. And everything is breaking out. I mean, real Apple's at all-time highs. Tesla's almost at 700, post split. SPY's at all-time highs, crypto's at all-time highs. There's literally, no joking, there's 10 or 15 OTCs at 52-week highs. Some of them like what was it, Celsius? I mean, it was up like 700% yesterday. Biotech's running, EVs running. I mean, it's just like, and we've been saying it all year, but it's just like that joke about that spinal tap up to 11. It's just like that volume has been going and going and going. And then here we are, New Year's Eve. And it's like they decided to go to 11, one of my favorite movie clips, by the way. But
I watched that movie because of you. I watched that movie. Yeah.
So, I mean, it's like, find me something that's not, real estate values at all. And maybe maybe we talk about bubbles and stuff, but it's like, many of I live in the middle of nowhere, Michigan. Nowhere. Okay. My nearest neighbor is almost a mile away and it's a rental house that I own. Okay. I can't see anybody in this small town. There are houses that sell in days. I saw a house the other day, and expensive. I'm not talking like fixer uppers. Very nice houses sold the same day it was listed. Real estate values, it's like, find me an asset class that's not at all-time highs right now, other than the US dollar, which we probably don't have time for the Federal Reserve conspiracies, but
that should be an episode.
I don't want to get killed by the Federal Reserve.
This is true.
But it's kind of weird. I mean, I know that people have been comparing this to like the .com boom. It's like we're at a boom again. And if I've ever witnessed a boom, this is a boom. It's very hard to kind of lose on the long side, right? I mean, it's a joke, right? It's very easy to lose both sides in the market's extremely difficult and dangerous, but a lot of people on the long side are making money. And I know a lot of people saying, I can't day trade, but I can swing. And I'm like, well, why can't a new person day trade, but they can swing? I was like, well, if you swing, you've got wide risk and everything goes higher.
Yeah, you just close your eyes, man. And if your stock's red, just pull the blanket over your head and wait a few days and it breaks out.
But I mean, but it's a funny one because I mean, I know, Tim, you'll say nothing dies, but ultimately everything does die, right? I know you're saying it doesn't die for 2 days, 3 days, 4 days, yeah.
Yep.
But it doesn't die on the first day or the second day, but it does die on the fourth or fifth. But it's how, I mean, look, there's money on both sides, but it's tough. I think it's tough as a short when everything just goes higher and higher and higher.
Well, and that's and to me, you know, and I know we've had this debate many times, but it's just like, you know, listen, no trading is easy. Nothing is easy. Okay. That's not the point we're trying to make, but it's just what I talk about is like risk management. And it's like when you get an ACY that, opens up 100% and then just starts halting to the upside and it's skipping $10 at a time. I mean, yes, you could buy a $100 stock and it could skip to the downside $10 at a time. But man, that only happens in like extreme fraud, Enron type situations. Yeah. Okay. Where a stock and you just can't get out because it's 90, it's 80, it's 70, it's 60. But on the short side, RHE, UUU, TCCO, all of these 1 million floaters, all of them ran the same day and they all just halted to the upside, and you can't get out at that point, Mm-hmm. So risk management wise, I just think it's so much more skewed towards that long side. I mean, yes, obviously you can lose. Yes, all penny stocks fail eventually, but
no, but that's just one more thing I'd say on that is
BT hit a new high a day. See, you should have bag held it.
I should have just bought lower. Same way. I mean, look,
beautiful VWAP hold, high a day break as we're talking.
But like, when I short, all I do is add higher and higher and higher, and it seems to work. So why don't I just buy lower and lower and lower? Surely that's going to work as well. No, but with all seriousness, one of the main changes I've made to my game is trying to cut out 1 or 2%. Every now and then you get pissed off and you end up on a rate that you don't want to be on. But a lot of the time I'm cutting out 1 or 2%, and that's the way to trade. If you're long, cut your losses tight. If you're short, cut your losses tight. Yep. But the point I'm making is that the point is to get as much money as you can in the long before it goes higher. But that's quite easy in this market because you're buying your higher day break, or you're buying the VWAP, and there's not much downside if you're wrong. But for mainly me as a short, I'm trying to get as much money in it as I can where the top is, but where the hell is the top? Do you know what I mean? Like, where is it? And if you get a lot of money in the wrong place, it's a disaster.
And like to me, you mentioned the .com boom, and it's like, and I obviously I have opinions on everything, but much like Camaros and assholes, I'm the same with opinions, but but it's, to me, it's just so much different than the .com boom, because these are, I mean, so many of these, whether it be like, everybody always made fun of pets.com. Pets.com was like the ultimate bubble boost. Well, but here we are in 2020 and we got Chewy. We got Chewy. Yeah. And Chewy has been one of the best IPOs ever. I have 3 boxes a week show up from Chewy. It's because my big Labrador and my cats, but it's just that's always the difference to me in 99 and now is pets.com was a joke. They had no sales, they had nothing. Here Chewy, and I told this story, I think on one of the YouTube videos. It's like 6 months ago, the FedEx guy backs up and I'm walking across the driveway and I'm like, oh, I'll give him a hand. Open it up. 90% of his truck was Chewy boxes. I'm like, well, this isn't pets.com. This is a real business. So.
Yep, totally. So what do you guys think will happen? Do you feel like this is going to at some point stop?
It has to. I mean, like, that's Kim.
Why?
You should get
Why?
in. Kim, you should get into the market now, because now is a good time to be long. But it's also a bad time. It's a good time to learn bad habits as well.
Bad habits, man. It's
very good time to learn bad habits.
That's what I'm afraid of.
Steve. Great point, Steve.
Bad habits. I don't want them.
I totally agree with your point. I mean, it's like, I think like 2020 was the greatest time to be trading, but on the flip side, it's probably one of the worst times to be learning
Yeah.
you know, especially on your own.
Yeah.
Okay. If you're not listening to, you know, 60-year-old jaded bald head guys like me talk about the old days, you know, it's like, if you're on
Yeah.
your own, man, make sure you're reading history, you know, make sure you're listening to war stories or
Yep.
all this. I mean, it's just, because it teaches bad habits right now,
Yeah,
man. you know,
exactly.
so.
And a lot of them, I think, it's that, unconscious confidence. I think a few of them are thinking, oh, I've got it figured it out. Yes, exactly. And that's gonna, that's part of why I haven't gotten in there, because I'm like, oh no, this is just too good to be true.
Well, it is and it isn't. It is and it isn't.
Yeah.
I mean, a lot of
I'm
these
not
loans
alone.
aren't even learning risk management though, because they're just
Yeah.
buying and tripling their accounts. And they're like, market's easy.
Yeah,
Stock market.
exactly.
I've
That's
just
what I
got a knack for it. I'm just naturally good at it, and I
That's
didn't
it.
know.
That's what.
Which is
that's
that-
exactly what I think.
That's the Dunning-Kruger effect, which
Yeah.
Stephen, you probably know, but it's like the whole idea behind the Dunning-Kruger
I
effect
know
is
it.
you get a little bit of knowledge, and you know you're here, and you think you're up here, you know, and then you especially in trading, you quite quickly get humbled because the market lets you know that, okay, and I'm doing the hand gestures if you're listening, but you know, the market says you're not up here, buddy. You're actually down here. So
Yeah. Yeah. But what do you guys think? Do you think this is going to last for all of 2021? Some of
you answer first,
2021?
Stephen.
I mean, look, I think for me, it's two different things. Hedge funds have got increasingly involved in the market, and there's a ton of new traders who've come into the market, like Robin Hooders, if you want to call them. And the combination is that penny stocks are they're more unpredictable because they don't follow the rules anymore.
Mm-hmm.
And I can't see, and we can talk more about that anyway, but I cannot see the hedge funds getting out because there's too much money in it. And I can't see long stopping when it's on the TV. I can't see new people not coming in when it's on the TV every day. It's me, mom and dad are like, are you doing that thing that's advertised on the TV every day where everyone's going to lose the money? I'm like, but I don't lose though. Yet. So I can't see it ending. No, probably not. It'll quieten down a bit. But what gets me is like, how did maybe say September just drop off a cliff? How did it drop off a cliff? Where's the volume? Where's the liquidity? How does it go from 9,000 million to quiet? Where's the Robin Hooders? Because the Robin Hooders don't know it's August and there's nothing to buy. So What's going on there?
Great question.
So my answer is, number one, I know I joke a lot, but it's going to come. And we talked about that the other day with Dan at Trade Zero. I think if we can ever travel again, if people can leave their houses again, I think that, I think people are going to be like, listen, I want to step away from this computer for a little bit. So I think it will slow down. But I think 2021 is just going to be another record year, and then maybe another year after that or something. There's just too many good stories out there, man. There's just too many. I mean, again, it's like Peloton. I mean, I know I go on and on and on about that stock, and there's so many smart businesses out there. There's so many smart businessmen. I mean, Peloton took a hit for like a month because they couldn't manufacture enough bikes. What do? They did exactly what the stock market is designed to do. They took, I think, 500 million in cash that they raised by selling stock to buy a contract manufacturer. I mean, that is what the stock market's designed to do. Yeah. And then here we are back at all-time highs on Peloton because it's I mean, they're like Apple 2.0. It's just a great business. It's a great product. Yeah. The other day, my daughter and her 3 friends, I had to yell at them. They were working out for 3 hours straight because Peloton has these dance classes and yoga. I mean, they're out there. I've got that detached gym in a separate building. I go out there and I'm like, you guys need to quit. I mean, they're soaking in sweat, but they're doing this dance stuff. It's an amazing product. And again, Peloton takes the money from the stock market, from the investors, the people that buy their stock. They did an offering, they diluted their stock, but then they pour that back into a contract manufacturer, because Peloton's number one issue was not being able to manufacture enough bikes. They couldn't meet demand. So that's what I look at. You know?
Yeah.
And can I just say, when Tim Bohen is telling you you've done enough,
it was like
you've probably done enough.
I'm not bullshit. They were, I mean, I'd go out there. It was like 2 hours, and you're right. But I'm just like, you know, they're 15-year-olds. I'm like, girls, take a break. You know?
Exactly. Drink some water. Do you guys feel that these Robin Hooders, for lack of a better term, are, you know, I think it's also because the pandemic is not ending, right? It's like it's coming out in like part 2, or a more, you know, lethal version of it, or whatever. It's just a lockdown Stephen talks about that's happening again now in England. So I guess I'm just curious if, and let's hope in another 6 months or in this next year, it does start to calm down. Can you see the people, let's say, who were betting on sports before, or these people, once they've been exposed to the excitement of the market, can you see them leaving? I'm not sure I can.
Stock market's heroin, man. You don't get off it unless you don't get off it unless you're Leonardo DiCaprio in Basketball Diaries, and that dude locks you in a bedroom for 4 days. Okay,
I need to watch that.
And you scream, it hurts. For, you know, and that's the only way you get off the stock market. These people aren't going back. You haven't seen Basketball Diaries?
Nah, but I'll watch it. But do you know what the question of questions is? So do you know what? Like, so for people, not just the question of questions.
The question of questions.
The ultimate question.
What is the ultimate question?
Who wants to be a questioner? The ultimate question is to give people advice and to help them on the podcast. What are the good habits and what are the bad habits that people are demonstrating right now? Because that's what you want to tell people. Because people are like, oh, I'm winning, but I don't know the difference between what's good and bad, what I'm doing. Yeah. Can we explain what's a good habit that's making money now? Yeah. But what's a bad habit that's making money now but won't make money next year?
Well, give us 2, and then we'll see what Tim says.
I mean, look, just buy is ridiculous. But everyone knows that. Everyone knows that's. I would say.
Well, I know I'm supposed to be letting you go, but a lot of these people don't know that. You know, keep in mind. You know.
All right, so tell them.
You don't know that that's a bad habit.
So tell them, Stephen, that they don't, because you're presuming some people know this, but I would say those are just some of the veterans that know this. No, I know this because I've been here with you guys a year and a half.
You guys.
I got the point. Come on, Tim.
Tim's like, nah. You look. The best advice Tim Bohen is. There's 2 bits of advice. The best advice Tim Bohen. One, he told us not to quit, but it's because he recognized I had potential. There's some people I'd probably tell to quit. That was one of the best pieces of advice he ever gave us. The second thing, and he repeats it to the pro people over and over and over and over, is build a case. It's the best analogy I've ever been given. I give it to everyone else. Whenever I'm giving other people advice, like whoever asks us or friends, I'm like, build the case. Count on your hand what's bullish and what's bearish. Yeah. Have you got a big enough case as a lawyer in the courtroom? Have you got a good enough case to win? Because otherwise, those lawyer fees are expensive and you don't want to be taking that trade.
Yes. Good point.
Build a case, because these new traders aren't building a case. They're not. They're just doing what looks good and feels good, and that's high day break. It's a VWAP buy. That's not building a case. That's one indicator. You should have 10 indicators.
And again, I've talked to some young guys last couple weeks, you know, just like friends, kids and stuff. And like one of them bought BlackBerry, which BlackBerry had some good news, AI, tied to autonomous driving and stuff. But see, I knew the story. So I knew that they were, you know, BlackBerry's a bounce. They're trying to go into AI and stuff. And I'm like, and I was curious. I'm like, well, why'd you buy BlackBerry? He's like, well, it was up.
Oh
Yeah.
no.
And he was
Well,
trading $50. I mean,
Yeah.
it's like
Yeah.
it's
but
it what
it's still
and
it's
that
a
and that's what I told him. I'm like,
lens.
listen,
It's a
you
lens.
you need to if you're going to be if you want to do this long term, if you want to do something quote unquote real, you got to know the why. You got to why was BlackBerry up today? And if you then come to me and you're like, well, I bought BlackBerry because it's an AI play specifically into electric vehicles and autonomous driving, and
Yeah.
they had a very solid press release, and they've got this QNX technology and blah blah blah. You can still lose on that trade, but at
Yeah.
least, like Steven said, at least you know the why, and at least you now can, build that case ultimately. So
Well,
but
you guys supply us with the paperwork for us to put our case down on the Stocks to Trade team, and
Yep.
that makes a big difference because I sense that you and Stephen at this point, you guys can do it in your head quickly. Have I built my case? You're like, bam, bam, bam. Do I have all these things? But for somebody
Yeah.
who's a new trader and they don't know all those questions and they haven't listened perhaps to all the recordings yet, that sheet of paper forces us to come up with what that case points are. So
Yeah, and sometimes you don't build a case and you like short something, you're like, this isn't working like it's meant to, and then you haven't done your research, and you'll go look at the sector and be like, oh, I've shorted an EV. Stuff like that happens as well. But it's like Warren Buffett. Like Warren Buffett's like, invest in stuff that you understand.
yes.
Invest in stuff that you understand and you think's got a bright future. And penny stocks is kind of just the same, right? Like,
Yeah.
And like you don't understand biotechs in the beginning. But you have to. How do they work? How do they operate? What drugs are good? What drugs are bad? What phases are good? What phases are bad? When do they dilute? You need to learn the industry.
Yeah.
So you need to understand it. Otherwise, don't bother trading it.
And I would argue that's what makes it exciting.
Yeah.
The understanding the industry. I mean, that's part of the fascination for me is understanding. Like I was asking you guys about the biotech, is that because of the pandemic and trying to find a vaccine or a better vaccine or whatever, but because to me that's what makes it so exciting, and that potentially is like a spider web where, if this is happening in this sector, maybe that's going to happen in that sector, and then you potentially are ahead of something before it blows up. Like your Chewy, is Chewy the actual name of their ticker symbol? What's their
CHWY, but Chewy.com is what it is. Yeah.
Gotcha.
So
sorry, Tim, you want to say something?
No, and that's where I think a lot of again the fun of it comes from. Like you guys, I mean, Stephen, especially on the webinars. You'll hear me get progressively excited as you start ticking off these things. And like you heard me do, BlackBerry spiked 2 months ago, but I still remembered why. And it's like it's doing nothing right now. But it's like that. I mean, there's 16,000 publicly traded stocks. You can't buy them all. Hell, these days we have 50 runners in the morning. You got to have some sort of process to actually find the quote unquote best. Then you got to have a plan, because if your best stock doesn't work, you can't bag hold. And, and that's the number one worst habit, I think, that right now. I mean, listen, and again, Steven's there every day, and he, he's joking about my nothing dies quote, because it's like you get these you get the standard penny stock move, that parabolic move, then it goes sideways for a couple of days, and then it gaps down and then goes sideways. And then all of a sudden, a week later, just out of the blue, it hits new highs again. And it's like, and that's rewarding the people that are bag holding. Well, at some point, we'll return to history. And that, I don't even know if anybody remembers the 3-day rule. It's like, I feel like this is like something from the 80s. It's like back in the day, from 2007 to 2015, you'd get that big spike. Day 2, maybe you'd get a small secondary spike or a slow sideways. And then day 3, everyone left, thing gaps down, fades all day, gaps down the next day. I mean, and that was so predictable. Where these days, the opposite happens. 3-4 days later, they spike again. So,
but I mean, the way I see it is on the long side, there's bad behaviors are rewarded, and on the short side, there's no room for error. That's basically, you cannot be underwater on a first green day or even a second green day and think, I'll just swing and it should be okay. You used to be able to
I
do
know
that.
I already
You
said
used
it, but Monday, 2 days ago, ACY stock went from 2 to 38. Same day, RHE went from $1.50 to 16. Same day, UUU went from 3 to 14. Later that day in after hours, same freaking day, TCCO went from 4 to 14. You can't stay wrong, man.
Can't make a mistake. You can't make a mistake. Look, you can be wrong, but you can't stay wrong. That's the way it works. But I would not. I mean, look, I'm a diehard short, but I would not recommend shorting unless you know what you're doing.
Yeah.
I would not recommend it unless you've got some screen time.
Yeah.
You've got some good education on it. I would
see
not.
That's the biggest thing. And I know, Stephen and I have these arguments, but and I know I've said it on a million podcasts, but I'm not anti short selling.
Yeah.
I'm anti newbies short selling. That's
Yeah.
what I'm against. And,
Yeah.
and when I, talk shit or post memes on my Twitter, I'm not posting that to some guy that's been shorting stocks for 10 years. Okay.
Totally.
I'm posting that for the guy that saw some screenshot of some $50,000 profit shorting a 1 million floater. And he thinks, oh, I want to do that. And he doesn't know how to take a stop loss. He doesn't know what these stocks can do.
Yeah.
That's the biggest thing is if you're new, you don't know what an ACY can do. You don't know what a KBIO can do. You don't know what a BLPH can do. You don't know what a DRYs can do because you haven't seen
APVO as well.
APVO. Yep. Live on the podcast. SPI. Remember?
Yes.
I mean, SPI, we were losing our minds because it was at 25. We end the podcast, it goes to 60. So you don't know what these things can do. That's what I'm at, I'm just trying to save when I do those rants and the tweets and stuff. I just don't want you to blow up. Going back to Steven's very first time we met, I said, you got to stay in the game. And if you don't know these moves that these things can make, you're done. You're done. Your 5,000 account is gone. And if you're a 22-year-old kid, it took you a year and a half to save that money up, maybe longer.
Yep.
You're done. Yep. You're done.
For sure. What's another bad habit, Tim, you think right now this crazy market is potentially creating for new traders?
Trying to short sell.
In addition.
So I think the biggest things are the three biggest ones I'm going to give is I'm kind of Steven kind of nailed it. Just, actually try and figure out the why. Okay.
Yeah.
Do a sheet, and I don't care if you use my sheets or just, try and figure out why is this stock moving? What are the mechanics behind this? Because at some point it's going to slow down. Yeah. And you can't just buy anything. Okay.
Yeah.
You need to find ideas that, because ultimately the stock market's a market. You need people willing to buy higher. And you need that story. You need that hot sector or something to get people to say, okay, the stock went from 1 to 2. You need people to bid it up to 225 to 250 to 3 in order for you to sell into it. So you need to develop the habit of actually understanding the why and not, and I know a lot of people say, oh, just trade the ticker. And I get that. But I think, especially right now, it's you got to figure out the why. And then number 2, I think the biggest bad habit of 2020 is that bag holding thing. It's you almost could, any mid-range or high price stock, I think you could have bought it at basically any point in 2020 and just forgot about it. And you'd probably be green at this point, not penny stock. Right. If you're talking $10 and higher, and this is not scientific, but so many of those stocks fade off and come back. So I think that's a very bad habit because I think a lot of people, and I love my boy Dave Portnoy. Dave Portnoy raised $9 million for small businesses, and he's been a week. I think he did it in a week. Wow. So all stock, and I love my boy. I love him. I hope to meet him someday. Greatly respect him, self-built businessman. But all stocks don't go up forever, and I think I think all stocks go up is the number one bad habit of 2020. It's true in 2020, but I don't know about 2021, 2022, 2023. So
Yeah. Anything else, Stephen, you wanted to add by way of a bad habit?
Yeah, no, it's like if you don't know.
I mean, with Steven, it's the cocaine, it's the heroin, it's the prostitutes, you know.
It's been all going down in my bedroom. But no,
Breaking
it's
quarantine. Could you get prostitutes during the quarantine?
Yeah, I don't know if my mum would let it through the door.
Probably
But
not.
if I could, I would. But no, it's just not being. It's just trying to be first, because look, there's two types of way you can long. You can be first on a breakout, or you can recognize that shorts are underwater and at a key level they're all going to cover. There's two ways you can buy, but I don't buy other than those two ways. And if you knew, you probably can't figure out the second way yet. So just don't buy chasing stocks up. Don't try and be first on a key move. That's the main thing for me.
What have you seen with the people that reach out to you via Twitter and Instagram? What do you see there?
Sloppy entries. Sloppy entries. They're getting away with this. Just getting away with sloppy execution.
And like, you know, in again, I'm sure Stephen can concur. It's like, if you ask them, like, why'd you buy there? They're like, oh.
They're learning. We all learn.
Sure. I mean, it's totally true.
I had to lose a good $10,000 before I started being like, oh, how do these biotechs work? I don't want to lose this money anymore.
Yeah.
Why?
And NXTD, you brought up NXTD hitting high day, 10 cents from breaking out. So.
That's a company that just does everything, right? Is it? Because I'm like, is it Bitcoin? Is it someone else?
No, I think you're thinking of Neti, Nete. And it's amazing. Well. I don't know if you heard me lose my mind on the webinar this morning. Neti pivot, and I was like, wait a minute. I remember that date. So Neti, I tell this story all the time. I was in New York City the day Bitcoin hit the high, December 20th, 2017. But Neti pivoted into Bitcoin the same day.
Wow.
Bitcoin hit all-time highs and then fell apart. What do they do today? We're in EVs, you know.
What? Come on. What the hell?
But the thing is,
penny stocks, baby.
But NETE, if you know the chart, it's got a history of gapping and just diluting, gapping and failing. But then I call it NETE, but NET, whatever. It's somehow managed to hold form and break out. And I'm like, how is this piece of shit been given a second chance from the public? From investors? How is
because
this
they don't know, because everybody's sloppy, like you're saying.
It's on the chart, the daily chart.
Maybe they're not even looking at that.
You have to. I mean, it's right there. I mean,
but no, Kim's right. They're not. Again, you know, I talk to these people. I'm like, what? You know, I'm like, did you look at the daily? No. You know.
No, that is not true.
It's true. Yeah.
Is that what you get?
Yep.
Did you look at the daily? No. To be honest, I remember 4 years ago.
And I'll get people asking
me, like,
me,
shit, I didn't check the daily.
Like on the pre-market preps, I get people asking me, they're like, why do you look at the daily chart?
Okay. No, but before I think I'm a know-it-all, I remember when I first started forgetting. Shit, yeah, need to look at the daily. I need to check that out. Because I would just see, it's human attraction, see stuff moving and just be like,
yeah,
this looks good. this is one.
And again, listen, nobody is done in this game. Nobody has mastered it. And again, and I'm not trying to be like, oh, I'm some super genius, but I mean, you see it, Stephen. Anytime someone brings like a stock, what's the first thing I do? Very first thing is that daily chart, you know?
No, you have to. I mean, because the daily tells the story of what everyone's done, right? So that's all of the information combined into one. So the daily is your overview for me. Then it's looking at all of the other indicators to be like, is it going to do what it's done in the past?
So is that happening? When the Robinhooders are coming in, I mean, we have to look at that Robinhood platform. I'm curious on the iPhone, you know, there's just so much space on an iPhone. It's like I wonder if they're even having the dailies accessible to them. I'm sure they are, but like how much could you see? How much could you see on your freaking phone?
Chart. It's a line chart.
Yeah.
It's not even candles. Yeah. I don't know how you could. And again, I know there's like some veterans that I know. I actually know some guys that don't even trade with charts. You know, but anyway,
wow.
It's a line chart. I don't know how you could ever look at it. I mean, and when I say line chart, if you're new, go to Google Finance, go to Yahoo Finance. It's like, I don't need, because you can't see the opening and the close price. You can't see, I mean, it's like, I don't know how you could ever trade on a line chart.
Yeah.
But I remember first looking at candles and thinking, oh, this is confusing. And I'm like, did this? And I couldn't figure out when I'll never forget when it got explained. It was like, if it's a green candle and it closed at the high, that means it closed high. But if it's a red candle, I was mixing them and getting them upside down and stuff like that. Got to remember, it's tough, man. Tough.
Oh yeah.
Because you read those charts like second nature.
Totally. It's a lot in the beginning, but that Brian Shannon book.
Thank you. I was going to plug it. Yep.
The Brian Shannon book that you told me was worth the $75 some odd totally explained those candles to me and helps me, there's a lot at first to comprehend, and I have lots and lots more to learn. But I think for the people that are coming into this without having the good fortune of hearing you guys, they don't even know what they don't know, and so they're presuming it's a lot easier because there are those people saying it only goes up, and they're not even realizing all this work they have to do to just understand the fluency of this language. It's like another country. You're going into another country with specific traditions and taboos, things to do or not do. And if you don't know those before you go, or learn a little bit of the language, like where's the bathroom and hey, I'm a tourist, you're going to be kind of in trouble.
Man,
well, it's like, I tell this story all the time. It's like, I've been on this podcast with Steven for 3 years and I still don't understand 90% of what he's saying. I just smile and nod,
I don't sometimes I think
that's why I agree with him so much, because I don't know what he said. So the easy out is just to agree. I'm like, yeah, sounds good.
Not true.
But trading's hard though, right? Like with trading, like some days I think I totally get trading. I've got it. Is there
a word
above
hard? Can you give me a better word than hard?
But sometimes think you've got the market, and then I'll have a red week and think, I don't know if I want to do this anymore. But then you just need a day, and then you're back on it, and you're like, should I just be getting a job here? Am I going to make it?
And that's the biggest key, and we'll finish on this.
Yeah.
That only works if you keep your losses small. Because listen, it sucks to go on a multi-day, multi-week, go an entire month and look at a red number.
Yeah.
That only works. You can only, again, stay in the game if you manage your losses. Okay.
Yeah.
And it sucks. And it's $100, $500, $700. But if those become 7,000, 70,000,
isn't that why they
can't recover?
I think you guys told me this, but that I wouldn't want to look at the dollar amount, but the percentages, so that I keep my eye away from being demoralized by the dollars,
or even the chart. You're just looking at when you're looking at your stops. Again, if your plan is to buy a 250 break and risk VWAP and it's 225 and your goal is 3+. You just look, and if that stock touches 225, you're out. You're not sitting there looking at that number, and then the number goes up a little bit, and then you're like, oh, and then it goes down a little. You're looking at that chart, you're looking at your plan, and if it hits your stop, you take your stop, and the dollar amount is what it is. But you should. I always say this: if you have a plan, nobody writes a trade plan or marks up a chart factoring in a $50,000 loss. Okay. Now, unless you're some huge hedge fund guy. Okay.
Right.
Nobody does that.
Yeah.
You're always, and you have to have that plan and stick to that plan, because I'm guessing if you look at the chart and you figure out your loss, you're figuring out a $200 loss, because that's where the chart breaks down or breaks out. If you're short, if you're like, listen, I'm going to short the high of the day at 3, or I'm going to risk the high of the day. I'm going to short it 280. I'm going to risk that $3 reclaim. I got 1,000 shares. That means I'm risking $200. You don't say, I'm going to short this stock and risk 20 grand. You don't do that. But when it hits 3, you got to take it. You got to take that hit, because what high day means when you're short a low floater.
Yep.
And if you don't take that hit, then what? So you're going to take the next one? Then you don't take the next one. Then what? So you're going to take the next one? And again, if you couldn't take the first one, you're not going to take the next one. That's even worse.
Exactly.
So when are you going to take it?
Yeah.
But I mean, the way I've like kind of grown up in this game learning is if you're not profitable, you should be losing tiny amounts so that it doesn't even matter. Like $2, $3, $1, $2. Whenever I see people losing like $7 and stuff and making 10, I'm like, thank God you're doing it the right way. Like you've got some sense.
Yes.
And the posting them, I'm like, cool, post it. That's cool. Once you're all profitable, my rule that's kind of kept me sane over the years is never give back more than a day. Typically, never give back more than 2. Do not put yourself more than 2 days behind what you can make. And if you don't give back more than 2 days, you shouldn't really be on a red week ever. You're hitting like 500 days, 600 day, then you lose 1,000, and it's terrible to lose that 1,000. But you give back 2 days, learn the lesson, get back on the horse, keep on going.
See, again, that's another big mistake a lot of people make is, they might win 4 days in a row, but then they give back 6 months.
Totally.
So
but people do it.
You're 4 out of 5. You're like green, red, but it doesn't matter if it's 100, $5 grand.
Exactly. Exactly.
But people are like, oh, I've got if I ever see a 97% win rate, I'm like, when that 3% comes, it's gonna be a big one.
Exactly.
It's healthy. It's healthy to have honestly 70%. If you're winning 70% of the time, you're winning 80% of days, unless you're Jack Kellogg, God knows what his P&Ls are, but unless you're Jack Kellogg, 70% is good.
I listen. I mean, listen. If you're hardcore about your risk management, you can make money with less than 50%. But I always think 70%. If you're at 80, 90%, I same thing, Stephen. I'm always thinking, okay, how much of a ride are they going on? In long or short.
Yeah.
It's like, okay, how much bag holding? How patient are they waiting for this to come back, or are they going for that $5,000 ride to make 50? And it's like, I won. It's like, yeah, you won. I get it.
But that loss. I'm waiting for that day you go quiet on Twitter. That's gonna come. No, but even for me, I should not be taking 1,000. A lot of green days are 1,000, but a lot of red days are 1,000 or 1,300. 2 days ago, I had a red day of 1,300. I should not be taking those losses. I'm trying to iron it out my game, but I shouldn't be. I've got a problem with it right now. I struggle.
But again, that's a manageable loss because you can make 1,000 the next day.
Yeah, you can. But still,
if you lose 50, if you lose 50 or even 5, I mean, 5 is a big hit. It's like
5 would be a terrible hit. Yeah.
Yeah.
Five's mostly a month gone.
Yep.
If not all of it.
Yep.
Yeah.
Just feel like we're ending on sadness.
I got to jump on a SteadyTrade team webinar here shortly. So, any closing statements from y'all? I suddenly went to Texas thanks to my steer behind me.
Yeah, it's a beautiful steer. I like the background. I like the bear illustration.
Are you in a sauna right now? Have you decided just to be in a sauna heating up?
I could do it from.
I said this in Pro, and you didn't reply to us. I was sad. I was like, Tim, is your new office a sauna so you can get your hour sweat on?
I can do it. I could do a podcast from the sauna if you want. But did you notice the bear? He's actually it's a mountain range too. So.
Oh, it is that I didn't catch. Let me see the picture again. Oh, I can't see it for some reason because we're not on. So. It's beautiful background. I like the background a lot. It's working. I see the mountain range now. Now I see it. Very cool.
So artistic, Tim.
So. My wife takes everything out. So
I mean, look, for me, it's never. If I can recap a few things, it's never give back more than 1 or 2 days. If you're profitable, if you're not, you should be trading dollars up and down. Don't short unless you know what you're doing because it's dangerous as hell right now.
Or do it on paper. You can always
do it on paper.
Again, I know we have debates about paper trading, but I would much rather see you get smoked on a paper short than smoked on a real short.
Even if you get smoked and it's $50. I don't mind if you get smoked and it's $50. Just don't get
short
smoked
5
for
shares.
$5 grand. Yeah. Go on the ride and enjoy it and think I could have had a night out with that $50, but learned a very good lesson.
Yeah.
For sure.
And build a case. Always build a case. Advice from Tim Bohen. Always build a case because that's the number one bad habit that traders in this age do not have.
Yeah.
I concur. So, Kim, did you have anything to wrap up with?
No, it's so good because I just feel like every time I just get richer and richer in my knowledge, thanks to both of you. So I would just say to anybody who's a new trader, if you're just finding us on YouTube, you guys need to listen to these two men because they're going to save you so much money. So much money.
So much money. And I made some money because I back out BNGO short and it's coming down. So everyone's a winner.
Everyone's a winner. So it's like Oprah. Everyone gets a car.
Everybody gets a car.
All right. That being said, thank you, Kim. Thank you, Stephen. And to all of you, wherever you're listening, keep in mind, definitely check out SteadyTrade.com. If we mention books, if we mention links, etc., they're always in, I call it the show notes, but it's kind of the recap of the podcast. And share with your friends. Would love to continue to grow this. It's been a wild ride over the last couple of years, and we really enjoy doing this. And again, if you got anybody that's interested in trading, it's a great free resource. Listen on the treadmill, listen on the commute, etc. And I hope all of you, if we never hear from you again, I hope you have an amazing 2021 and an even better 2022. And I wish the best to each and every one of the 8.8 billion of you on the planet. And we'll see you next time.
Amen.